Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. Today we have a massive amount of stuff to talk about today. The 3-week rally in the stock market. Is it about to come to an end today with the announcement from the FOMC? Really, Jerome Powell, the language after the announcement, I think it's very universally agreed right now that it's going to be 75 basis points again. However, what we're actually going to review is the newsletter that I put out for our Discord community every day, and how the market's actually breaking down right now, and whether or not the shorts are about to have the mother of all squeezes to the upside, because this relentless move to the upside really hasn't given them any room to breathe. The short side of the market was absolutely the right side of the market about 2 weeks ago, but now we got this persistent move to the upside, and it has a lot of people, I'm not going to say confused, but certainly surprised with how relentless this move is to the upside. So I want to give you a heads up on the FOMC announcement today and what to look for. That's really the big thing. The big thing we're looking for is the language after they make the announcement. Everybody believes it's going to end up being 3/4 of a basis points. Now it's just a question of what they say after that. You keep hearing about Fed pivot and all. Let's actually just take a quick look at the headline, and we'll actually break that down, because it's probably easier to make sure that we have it on the screen here and we can take a look. So again, 75 basis points to lay the groundwork for a step down. That's really the language everybody's talking about right now. Will they pivot? So what they're talking about there when they're talking about a pivot, and why this matters to you is, are they now, after all of these 3/4 of a basis points, determining that we've done enough, inflation's eventually going to come down based on the last GDP report, which was actually positive. We got a nice rally off of that as well. So we got dueling economic numbers right now. We have the CPI number, which 3 weeks ago, Consumer Price Index, was not a bullish number, but that turned out to be the bottom of the entire move, and we've been rallying since then. Then we had some really bad tech earnings come out. Amazon, Google, Meta just absolutely got crushed, and the market did not go down. And then the GDP came out, and we rallied again. So we're kind of in the middle of the new earnings season. We're about to go over AMD Stock Analysis and what we believe is going to happen. What's really interesting about AMD stock right now is the 3-month rally prior to the announcement of the earnings that we actually just came out last night. And I want to give you a little bit of a different perspective, because the same exact thing happened in the market when that bad CPI number came out, and how we're actually unfolding right now. I'm going to show you the AMD chart. We're going to take a look at the chart, the trade that I actually have set up for it now that earnings is over. But I want to be clear before we even give it out, okay? What we're talking about here are trade ideas that if this happens, then we plan to do this. That's a really big part that a lot of people miss, is they only see the part, well, we game planned that we were going to buy that stock, but it didn't do what we wanted it to do, so you shouldn't get involved if it does not. We have a lot of people that come into our boot camp, which starts every couple of weeks, and easily, beyond a shadow of a doubt, the biggest roadblock that they have is adjusting and changing their mind, or not taking action if what they want to see does not happen. So in other words, if you say, I'm going to cross the street if there's no cars, and there's no cars, you go, right? But if you say, if I'm going to cross the street and there's no cars, but there's traffic everywhere, and still go, man, you're not paying attention. And that's really the biggest roadblock that traders happen to have, because they do all that work, they put all that work in, do the research, do the game planning, read as many websites as they can, watch as many YouTube videos as they can. They're like, yeah, I want to buy this stock. But then the stock doesn't do what they expected, and they buy it anyway. So if I can give you a little bit of stock market savvy, that's one of the biggest things that can instantly make you a better trader, by paying attention to, is what you're planning actually unfolding. You'll save yourself a small fortune when you stop yourself. Stick around. I'll be back in just 1 second. Okay, so we're actually going to break it down. We already discussed the Fed and what's going to happen today. So the big thing with the Fed today is language after the fact, and whether or not he says, we're going to try and slow down a little bit because we think we're doing a good job. I don't think anybody believes that's going to happen. But again, if this happens, then do this, right? If they even give the slightest hint that they are going to start reducing or not raising interest rates as heavily as they have been, we could see a really big move to the upside. Now, the other side of that is, if they do exactly what's expected, we could see kind of like what happened in AMD last night, a big pot full of nothing and it's really already priced in. So it's really the language of what they plan to do going forward that should create the massive volatility to the upside if that's what happens. So we're going to do two things. We're going to go over AMD stock, but then we're also going to break down the bigger picture of the market and some individual stock ideas. I thought it would be kind of fun today to show you behind the scenes of what we actually do in our community. I'm going to show you how I broke down the market today. We're going to go from market to sector to groups to stocks and which stocks are in play today for me. We get a lot of questions about, can you show me how to do the game planning and that kind of stuff? So I'm going to walk you through a little bit of just one day's worth of how I break everything down. Okay. So moving on over, obviously, AMD stock analysis is going to be a big thing that we're talking about today. They missed, right? AMD missed, but still ekes out a 29% revenue growth. So if you dive a little bit into that, what they missed on were expectations. And you hear us talk about this all the time during earnings seasons when we're doing a stock analysis, is that it's the expectation that the stock will react to after earnings. A lot of what is expected is already priced in, but what we're buying is the expectations going forward. Remember this, you want to write this down. If we buy a stock today, if we determine certain stock is the best stock to buy now, we're buying the future cash flows of that company. We're buying the future potential dividends, the future potential appreciations. We are not buying what they reported. That's going backwards. What we need to pay attention is what was expected and how that should influence the price going forward. Now, AMD stock analysis is very interesting. They actually beat on revenue growth, but they missed on expectations. Now, just off the bat, you'd be like, wow, that's really bearish. They missed, right? But this is really where you start to level up and you really start to think through things very, very differently. So when we take a look at what AMD stock is doing right now, and we kind of bring this out, and we're going to go actually to the daily chart. Now, you can clearly see that we've had a mass amount of selling. And even if you just go over here, we're kind of topped out around 100, 105 at the last earnings report, right? Let me actually just bring that in. I want to make sure I have this on the, because it's very, very important. So right over here is the last earnings report. And you can see it actually reacted pretty positively to the last earnings report. You can see right there, the following 5 days were green out of that. But then we got this, right? So if you could take the price action from here to here, right up to where we are right now, you can see the stock's up, and you'd be like, I don't understand what's going on with that headline. The headline said they missed, they didn't beat the expectations. What is going on? Why is the stock not collapsing? Well, you know what? This is the same exact thing that the stock market did when we had that really bad CPI number. I believe it was on the 16th, if we take a look at that. And this is really where we start to put the pieces together, which was right here, October 13th. If you remember that day, we had a massive, massive move to the downside as soon as they announced the CPI number. And everybody's like, oh my gosh, we're going to crash. We're going to continue to go down. But this is where trading becomes kind of fun, where you like put this piece in and put that piece together. If you're a regular viewer of the channel, you know that we actually spent a lot of time talking about that 350 level being the average true move to the downside, which was basically a target where we expected it to push down to before it paused again. Now, what was kind of interesting about that was it was kind of bad news was priced in and hit that level. And what people, very similar to some of the tech stocks that did not crater after the big gap down, was that was where we expected it to get to. The part that shocked a lot of people is the fact that it stopped going down after that. And I think the reason for that, and this is based on a lot of conversations that we've had, is that you discount or you don't think through, just because it took one day to get there or one morning instead of 5 days, it still got there. So that doesn't change the fact that if we expected it to go from here to here, because it happened in one fast move, that still makes it valid that that's going to be the support level. So why am I bringing all this up, right? So essentially what happened was the market discounted this, all of the selling discounted that bad number, and now we're kind of rallying off that low. So AMD stock analysis basically telling us the same thing. And we're really going to focus on this one day right here. I want to drop some volume in there and you'll be able to see what I mean. You see that big giant day of selling? Well, on that big giant day of selling, AMD did the same exact thing that Walmart did over here. You can see Walmart was actually right here. Walmart was rallying, right? Nice 3 or 4 week rally. And then they pre-announced. You can see a couple of weeks later after the pre-announcement, they would say, oh, it's not going to be good. Numbers are going to be horrible. And then they actually had the moxie after that to rally after they just 2 weeks later, 3 weeks later after they pre-announced. So what does all this have to do with AMD Stock Analysis and actually setting up a trade today? Now, I want to be clear about this. We spend a lot of time talking about order flow and tape reading. Order flow is it obvious? Tape reading is it still valid? You put those two things together, it's kind of like, a Reese's peanut butter cup. You got peanut butter and chocolate, right? The perfect thing that you want, right, in a sandwich. In this particular case, I want to be super clear, and I'm going to walk you through this in the newsletter. The AMD trade that we're going to outline today is not an order flow trade. It is an earnings catalyst trade where something that was just announced appears to be already priced in. So it's a big thing when you're trading. You have to constantly ask yourself when big news comes out, was that bad news already priced in? Everybody knows buy the rumor, sell the news, right? It's basically the same exact thing. It's price action happens prior to an announcement. So all of that stuff happens. They pre-announced the unexpected bad earnings, like they're basically pre-announcing that it's not going to be good, right? They're saying it was PC sales and chip and all that kind of stuff, right? And then they had earnings come out, which came out yesterday. So the big bad pre-announcement, monster move to the downside, or community traded the heck out of it that day as a day trade. It was so easy to trade to the downside that day. But since then, the stock has been going sideways, and now earnings came out. So I just want to give you the visual of this, right? So as we're putting the pieces together, if we put the question, is it obvious? Well, yeah, it's to the downside and sideways. So that should imply another move to the downside. But right here is where they pre-announced. And then after they pre-announced, the stock did not go down after that. So you got to be saying to yourself, if this happens, what should happen next? So if a stock is in a bearish order flow and they pre-announce we're not going to have good earnings, it should go down. But it didn't. And that's the part of the trade that I want to walk us through right now, because it's kind of the reverse of buy the rumor, sell the news. In this case here, all of this bearish price action for the last 3 months since the last earnings report here, all of this selling happened before this pre-announcement. So now we come out with earnings that basically validates what the pre-announcement was. But the stock is not going down. It's actually up 5% after hours in the middle of this trading range. So there's a couple of things we can do right now. The first one is we're not making an assumption. We're literally saying, let's pay attention to what the stock is telling us, which is a big challenge for a lot of people in this last 3-week rally, where they're like, no, all the headlines I'm watching on YouTube, they're all bearish. Everything's crashing. I have to short the stock. I have to buy puts. I have to get out of the stocks that I bought. And yet the market continues to rally for 3 weeks. Paying attention is the number one skill that you want to learn. I understand you bought the book, you bought the course, you spent all that time on seminars, maybe took a couple of college courses, and you know what's supposed to happen next. What's supposed to happen next is probabilities. But the way that we make money in the market, the way that we have confidence, conviction, and really feel like we belong is because we know with 100% certainty what we're going to do next, but nobody knows exactly what's going to happen next. That's a very important thing to understand, because when you understand everything is what's probably going to happen, but what we're definitely going to do, man, it becomes so much less stressful to trade, because now you're not predicting anymore. You're just looking at what's probably going to happen, and then you take action. If it does, cool, let's go make some money. If what you expect to have happen doesn't happen, okay, so maybe you take a small loss or maybe you do nothing. So all of that plays into the trade that I'm talking about in AMD. So doing AMD stock analysis, it appears the bad news was priced in, because after that big move to the downside, the stock did not go down further. Then they announced earnings yesterday, and the stock is actually up 5% today. So the trade idea I'm looking at today is an earnings catalyst based on what should have happened, did not happen. We did not go down. So I'm going to be looking to initiate what we call a P1 position, which is an initial position on a breakout out of this 3-week trading range after earnings. So I want to be clear about this. And we spent a lot of time talking about these earnings type plays. I'm not buying it as soon as the market opens. I want to see the stock close strong today. I want to be super clear about this, because if we're looking at the trade together and we're mapping this out, we can see where this trading range is here over the last couple of weeks. So we're basically looking right around where we are, 62, 63. So I want to make sure that we hear the entire trade. I'm trading a breakout in this stock, looking for my initial piece because it looks like all of that bad news was priced in. It did not rally with the last 3 weeks of the market. It was waiting for this announcement. The announcement came out, and now I'm looking for it to catch up with the rest of the market. But I'm not going in with full share size because I want more proof. So the first piece of proof that I want is I want the stock to close stronger today. I want it to close near the high. How much in the high? Top 25%, top 10%, whatever number you're comfortable with. But it needs to close near the high, and it needs to close above the opening price. So essentially what that means is I need to see AMD stock today tell me, cool, the water's fine. Jump in, put your toes in, and then I'll start a P1 position. If the stock opens higher and just starts to melt the rest of the day and gets back into this trading range that we're looking at, I'm not going to do anything. So let's be clear about that. If it opens higher, pushes higher, and trades all the way down and closes below the open, closes near the low, and back into that trading range, I am not doing anything today. I want the market to tell me, if I pay attention, yes, the bad news was priced in. Yes, that pre-announcement was the bottom of the move. Yes, that 3-week trading range was more proof that we weren't going down further. Earnings came out going up 5% right now. Let's get a little more feedback at the end of the day. So is this challenging? Is this going to take a lot of time out of your day if you want to do it the same way I do? No. Look at the market at 330, 345 today. Spend 10 minutes. Look at where the price of AMD is and make a decision if that's the right risk potential for you, right? So now we got to talk about the other side of the market is what is the potential reward if the stock does indeed start to rally. If it rallies, usually the first place that I look is halfway back of the current move. So if you have a move from 0 to 10, 5 is usually my initial profit target. So now we hop on over and we use a very simple tool. We start to look at Fibonacci retracements. And I'm not going to use all the way back here. I'm just going to use the most recent move from the last earnings report, which is basically from there to right about there. So 50% right now is around 80. So we're looking at roughly an $18 move to the upside. Let me actually pop that in there right there. So is that the only place I think it can go? Well, no. Remember, when we choose to accept risk, when we buy stocks, whatever stock we determine is the best stock to buy now, we have to have an initial risk, and that risk has to be justified by the initial profit target. We never want to put a limit on it. We have something we call a profit maximizer, which allows us to hold on to those winning trades in a very formulaic fashion. So in other words, it's very structured on holding those winning trades. But profit maximizer is for after we hit our initial profit target. Our initial profit target, never forget this, our initial profit target is what we believe is likely in exchange for the risk we have to take on this trade right now. So if we're looking at a trade of roughly $18 up to our initial profit target in AMD, if that criteria I just outlined doing the AMD stock analysis, that roughly means that if $18 is the target, that means a 3-to-1 risk reward for our initial profit target would be roughly $6. Now, the way that we just set the trade up, you're probably not going to have a $6 risk unless the stock has a massive green candlestick today, which that wouldn't stink either, right? That would kind of validate our idea for the whole thing. So I want to be clear. It's not an order flow trade. It's an earnings catalyst trade that we're looking to see because the stock and all of that stuff that we just put into the equation has kind of worked its way out of the trade. Again, if it does close strong and tomorrow it pulls back, you know what I'm going to do? Take it like an adult, act like a trader, pay that business expense, take the loss and go to the next trade. We're setting up probabilities. If in your trading, if in your journey right now in the stock market, you're still having a tough time, honestly, taking losses, you really need to think differently. It's not hard. You just have to say, look, I own a business. There's no different than a deli or a pizzeria or being an accountant. It doesn't matter what it is. You can have a stationery. You still have to spend money to run that business. A trading loss as a business owner, which we are, we're managing a trading business. Sometimes it's software. Sometimes it's a trading loss. You have to accept it. And if you can't accept paying expenses to run your business, man, you're going to be out of business very quickly because those expenses are going to pile up. You need to be in business long enough to understand how to make money. So if you're struggling with taking losses right now, just shift the way you think about it. A trading loss is a business expense. As soon as you start to think of it that way, everything changes. You take the loss, you get your capital back, and then you can go and look for the next trade to make the money on the next one. So stop personalizing those losses. It doesn't mean you were wrong. It just means that that particular trade did not follow through. Remember that, and you'll save yourself a small fortune. And more importantly, get your head back, because you get all that money back, put it into another idea, and you're clear for the next trade. All right. So what I want to walk through now is I want to walk through sector rotation. I want to walk through how I am game planning the FOMC today. And I want to kind of give you a little bit of a peek behind the scenes of how I go and how I actually, I'm going to show you the picture, how I actually break down the stock market power pyramid. And every day we start to pull these ideas together from the bottom all the way up to the top. So what I'm going to do now is I'm going to share the breakdown. You can see that we actually break it down all day, every day. And we're actually in the middle of naming the newsletter. It looks like the daily ticker is going to end up being the name. So working our way through right now into Wednesday. So we're looking at FOMC day. Now, what I want to get across here, and again, if you come into my community, I do all this work for you. It couldn't be any simpler, actually. You just have to press the buttons in the stocks that you feel match your resources. I do this every day because I want massive conviction that if I hit that button and I'm about to put on a new trade, it's the research, the 15 minutes, the half hour, whatever amount of time you want to dedicate it to. It's the game planning research that gives you conviction for that new position you're about to put on. A lot of people hesitate because, like, I don't know if this next trade's going to work. That just simply means that you, number one, don't trust your edge enough. Number two, you didn't put enough time into saying, I really want to be in this stock right now. So think about it. We just did a 20 minutes of why I think AMD is an idea that's worthy of my attention today and where I think it's going to go. So ask yourself, are you just watching CNBC or Bloomberg or pulling up a scan and going into a chat room and saying, yeah, cool, Joe likes that stock, I'm going to join him? Conviction in our ideas. Now, this is really going to be something that you want to level up on this. Conviction in our ideas comes from that, right? But here's the part of conviction that is very, 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 very under discussed. I don't even know if that's a word, right? Think about this. Let's say you did the work on a trade, but maybe not enough, and you put the trade on, starts to move in your favor, and you're like, I'm getting out of this baby before that profit vanishes. But what if you did a little bit of extra work, had a lot of conviction in that idea, the stock moves in your favor, pulls back a little bit, and you're like, nope, I'm going to hang on to this thing. I have a great idea, and it's working. Why would I get out of something that's doing exactly what I want? Because I did that work, right? So here's the little subtle difference that will make the difference between, negative Nancy and happy Harry, whatever you want to call it. Negative Nancy got out of that trade too soon because she didn't do the work. She didn't have conviction in her idea. Harry, on the other hand, actually did the work. He pulled back a little bit, and he's going to hang on to that idea. That's the big difference. For every trade that you did not do the work on and booked $1,000 profit, but should have held because it's doing exactly what you game planned for, those winners are the reason your account is not going up. It is not the losses. You're not making enough on your winners. So you don't want to turn a $3,000 winner into $1,000 simply because you don't have conviction. You want conviction to hold the winners because you did the work. So like I said, I do all this work for you. I'm going to outline for you how I do it right now. And this is just a small part of it, but I want to inspire you a little bit to think of what it's like to think at higher levels so that you can start to look. If you want to come into our community, I'd love to see you in our community. There's a link below. You can find out about that. But I want to challenge you to think, if I hired myself to manage money, what qualifications do I have? You got to ask yourself that, right? You probably do that with your accountant, probably do that with your, your financial advisor. Go look in the mirror and say, what qualifications do I have right now? And do I need to learn more? That's a challenge that everybody's got to face, right? So let's actually get into what we're going to be looking at right now and how we broke it down. So you can see this is just the Wednesday edition, and we're going through the stock market power pyramid. So everything I just broke down in the market, we've actually launched beyond any of the reasonable numbers in the SPY. Let me actually bring this in here for you a little bit bigger. So the S&P is in a confirmed rally off the October 13 lows. That's the big day that we showed you over here, right? SPY traded into a 1, 2, 3 bottom, which is this reversal pattern here, broke above the 50% retracement, which is this one here, and has closed 3 days above the daily 50-period moving average. So think about what I just said. We just gave 4 reasons into the bullish argument right now. What's the reasons that you give for wanting to believe that a stock is going to continue? Do you say, well, it came up in a scan last night, or I saw it on Kramer, or I read it in a chat room, or I watched a YouTube video? How many reasons are you putting into that? The way that we teach things, we talk about building an argument for accepting risk. The better argument you have because of this, and because of this, and because of this, and because of this, I can't wait to buy that stock. Risk reward, order flow, tape reading, news, all that kind of stuff. Or I did a scan on the way to work today while I was in my car. I pulled it up on the app, and then that's not enough. That's not enough. So again, you might want to watch this part of the video again. Okay, you might want to watch this part again. Anybody wants to find out about what we do, there's a link below in the video. You can click on that link. It's in the description. So I want to keep going here. So again, just in this one sentence, we have all of those pieces of the argument. Heavy selling in the morning on Tuesday was followed by 4 hours of a big nothing. Looked like the bearish reversal ahead of the FOMC started until it stopped. Volatility dropped off a cliff as the VIX continued to move lower, validating the bullish move. So if you're not familiar with what the VIX is, the VIX is the volatility index. And when the VIX goes down, fear is coming out of the market, and that usually means the market's going up. So the VIX is actually pulled back a really, really significant distance. So again, adding to the argument, right? If you want to be a buyer of stocks, you want the VIX going down. They move in opposite directions. So remember, putting more pieces into determining if I want to buy, why do I want to buy? Because of this, and because of this, and because of this. It's not hard. I'm telling you now, the process, again, we got to see different market conditions, when to change, when it's still obvious. But this is really what trading becomes fun, because it's not difficult. You just need the structure, and you need to pay attention, and you need to set aside that 15 minutes. So let's continue to walk down. You might want to watch this video more than one time, take notes. I just want to inspire you to say, you know what? It's not hard. I just need to have a roadmap. That's really what you need at this particular point. All right. So if we keep working our way down through the way we're looking at it. So VIX continued to move lower, validating the move. So the VIX continuing to move down is validating the bullish move in the market. The stock market has slowly squeezed the bears with a relentless move higher. So what does that mean? Well, the bears up until about 2 weeks ago, very likely in this big move to the downside, looking for another move, but that didn't happen. You can see we're actually slowly grinding higher. So the bears are betting on the market going down, and short selling here, but did not go down, and went up and up and up and up. And now we've been rallying for like 4 or 5 days now. So we're likely to get, if the stock market slowly blew, we'll likely get a fast move higher that makes the shorts finally give up before we start a leg lower. So here's what I'm explaining here. Remember what I keep talking about. If this happens, then I plan to do this. So we have the Fed coming in now. We have a 3-week rally into the Fed. So we have, as we said before, there's 2 parts of the announcement. The actual announcement of the 0.75 of a basis points, which pretty much everybody thinks it's going to happen. And then usually about 30 minutes after that. So the Fed at 2 o'clock Eastern time, 2:30 is when they start to give a little bit more language. You're going to hear a lot of hawkish versus dovish. Are they going to do more and continue to pressure to bring inflation down? Or are they going to pivot a little bit? If they give the slightest announcement of pivot, we should see a fast move to the upside. Now, what I think is going to happen, again, all of this is now trading like a bull market where it's ignoring bad news. So what I think is going to happen after this 3-week rally is we're going to have a fast move to the upside, and then we see what happens from there. If we have that fast move to the upside, this was all priced in. And as of right now, the market is trading as a bearish U-turn on the weekly chart. So a bearish U-turn on the weekly chart means that we traded higher and took out the previous candle, and now it's a red candle coming down. So as of this moment, the SPY, the S&P 500, is a weekly bearish U-turn. Now, a U-turn is a momentum reversal pattern, not order flow. So remember we talked about before order flow versus tape reading? Order flow is this 2-week rally we're having right now. A bearish U-turn is a tape reading tactic, not an order flow tactic. So if we take a look at the weekly chart of the SPY, you'll see that it's actually a red candle that took out the previous day. So if you could visualize this, the same as that, and the same as that, well, things leave clues. So the color of this weekly candlestick after the Fed today is going to be a very big part of what we're looking at going forward. So continuing to break this down, again, you can take snapshots. Bad news for large cap tech stock did not phase the rally, nor another expected 75 basis points. So basically what we're saying here is knowing 75 basis points, having a pretty good idea that's what's on the table, we're still going up. So those two bad news did not, right? Bad earnings and another, such a great lesson in order flow and tape reading. Is it obvious and is it still valid? Has kept our community out of trouble, still making a few coins in the rally despite the tsunami of bearish headlines. Now that part right there is what a lot of people just need to understand. There's so much information out there right now, and a lot of people are brainwashed into it definitely going down and only looking at one side of the street. That's why we constantly talk about it. It is our mantra that is it obvious and is it still valid? Think back to the start of 2022. Was 2021 in the stock market obvious? Yes. When 2022 started, was it still valid? No. But a lot of people held those positions because they didn't have those two questions to ask, and then became more difficult, and they kind of held those losses. And going back to what we said before, it's a business expense. Take the loss, get your money back, and go look for another opportunity. So working our way down a little bit, you might want to pause this video, take these notes again. I'm going to show you the entire thing so you can see that we're working our way over here down the list. So we got a whole review on what the market's doing. We work our way into this. I don't know if you've seen this move in IBM that's actually been unfolding right here. This is definitely one that's going to be on the radar today, but it's got a clear 140. This move in IBM over the last week or so has just been absolutely amazing, especially since earnings. And now we paused a little bit in front of this big resistance. So just write that down. IBM alert over 140. That's the level I'm going to be watching over there. So if we continue to work our way down the list, again, I want to hopefully inspire you to see how deeply we look through the trade. We have a very calendar trades are one of the most popular trades in our community. It's one of our proprietary setups. Work your way down and we move a little bit further into rotation. We talk a little bit about some of the news that came out yesterday. Then we break it down to the industry specific groups. And then we break it down into the individual stock picks. And you can see there's a bunch of them in here as well, including all of that. So everything we just broke down in that newsletter is basically right here. So hopefully, again, hopefully you're on YouTube, you're looking to improve yourself, you're looking to make better stock picks, you're looking to find the best stocks to buy now and how to trade them. We just did a really detailed analysis, AMD Stock Analysis, and we broke down the market, showed you behind the scenes of how I set everything up for our community. I'm literally going through the stock market power pyramid, so it couldn't be any easier. I'm doing the research. You just need to ask good questions. Once you ask good questions, you start to eliminate those roadblocks, and then you get to the other side of the market where you now biggest problem is holding those good trades longer, but you got to get to that point first, right? So hopefully all this stuff really is something that will make you really think. You go look in the mirror. Do I have the qualifications to manage money? If the answer comes back, yes, cool. There's always a higher level for all of us. If you need some help, let me know. You can watch these YouTube videos. You can join us in the community. Completely up to you. But either way, want you to know how grateful I am for you being here as well. We also have a new free stock course that's actually here on YouTube. I'll post a link for that below the video and after this. If you like that video, then you definitely want to look into learning to work together. All right. Have an awesome day, everybody. I will speak to you soon.